Good morning, guys. Today we're going to talk about 3 ETFs to make you rich.
For those who already know me, welcome back to my channel. And for those who are new, I'm Kavisha, an immigrant who moved from India to US about 9 years back. And then I created this channel because I'm highly passionate about the space of personal finance. And on this channel, we talk about everything money.
So, guys, in today's video, we're going to discuss ETFs and the main categories of ETFs. And I believe if you are a consistent investor in ETFs, that's enough to take care of a big part of your investment portfolio. So, without further ado, let's get started. Guys, I know you can invest in stock market right now, and I can guarantee that. But I also understand that from the look and feel of it, stock market looks very daunting. With so much information out there as to which stock to buy, which not to buy, which one to sell, which type of investments you should get into, which brokerage house you should be using, which app you should be parking your money with. So I know it gets very, very overwhelming. And trust me, sometimes it gets very stressful when you see the market going up one day, coming down the other day. You don't know what to do. So hey guys, I have done some research for you, and in this video, I'm going to break it down and make stock market investing very, very easy for you all. So in this video, I'm going to give you some of your time back. We are not going to be spending a lot of time breaking our heads deciding which next stock to buy and which one to sell. We will not spend a lot of time in the individual stocks. Because if you talk about individual stocks, it takes considerable amount of research to understand how to buy, which one to buy, and when to buy. So let's not even get there. So guys, in this video, I'm going to give you 3 of my top choices for the best ETFs to buy. So when you buy an ETF on an index fund, you don't have to be fearful every day and think about looking at the prices, which one went up, which one went down. No, it's a very passive investment strategy, which I totally prefer, so that it gives you your peace of mind back, it gives you your time back, and still you are invested in markets. So it's win-win. Investing in ETFs and index funds is more like set it and forget it. So you don't have to bother about checking it daily and leaving your work and then going back again and then being fearful whether to sell, whether to buy. None of those things. So you get a lot of time back and still stay invested in market. So even though you want to know what price you're buying on, but still these are 3 ETFs that have a solid track record of very good performance that you can comfortable buying and investing in. Guys, there are a few things that I want you to keep in mind before you start investing in these ETFs. So guys, I want you to keep few things in mind before you start investing in these ETFs. The first one is know your whys. Why is your long-term goals, right? The second one is what is your investment plan? Your long-term strategy. How do you want to go about that? And the third one is the consistency. So in terms of consistency, right, what we mean is that you would have heard about a term called dollar cost investing, that each paycheck, or every month, however you decide, you try and invest a certain portion of your earnings into the stock market through these ETFs on a very consistent basis. Can't emphasize more on consistency or the dollar cost averaging, wherein you're taking the same amount of money over a long stretch of time and investing that on a monthly, weekly, or whenever you get paid basis. This is key to your wealth building. And then the fourth factor is understanding what you're investing in. Understand what is the underlying securities of these ETFs. And then please do not panic. These are well-performing ETFs which have a solid track record in the market. So please don't be fearful. Do your research, and once you invest, just stay invested. So these ETFs are highly diversified, which is one of the very important things when you start investing in the market. So you're not putting all your money in the same basket. No, they're spread out. It's not just 1-2 securities. It is total market stock index. You want to completely avoid that fear factor when you're investing in these ETFs. Essentially means knowing what your risk tolerance level is and reducing that risk so that you're comfortable with knowing what you're investing, how much you're investing, and where you're investing. And guys, if you're getting any value out of this video, please smash that like button below and consider subscribing. And please share this video with your friends, your families, and your network of people who would love to know about ETF and ETF investing. Now let's talk about ETFs. What are ETFs? ETFs are exchange traded funds. They are a type of investment fund that are traded on stock market just like individual stock. Each ETF is a bucket of individual stocks, just like a mutual fund or index funds, just that all these group of stocks are sitting inside that ETF. The main difference between an ETF and an index fund or a mutual fund is ETFs are traded on the market on a daily basis. So throughout the day, you will see the fluctuations in the prices of how it is moving up or down. Whereas when it comes to index funds or mutual funds, they are bought or sold at one price in a day, which is the end of the day price. So both ETF and index funds are low to buy, and with low expense ratio and low fees, they are low to maintain as well, which makes it a very attractive investment option for a new investor or a seasoned investor who doesn't want to spend a lot of time picking the right stocks. And the best part is ETFs are very easy to own. Whether you buy it on Fidelity, Charles Schwab, or Vanguard, just that you need to have an account with a brokerage firm. Guys, now that I have told you what ETFs are, I'm going to give you the 3 ETFs which I think everybody should be owning. But even before I get there, I'm going to talk about the 3 categories of ETF. The first is the total stock market ETFs, the second is the growth ETFs, and the third is high dividend yield ETFs. So from each of the categories that I just mentioned, I'm going to tell you 2 ETFs each from Vanguard. And now if you have an account with Fidelity or Charles Schwab, you can find an equivalent ETF there and get started on. But guys, just one quick call out. I would recommend that you do your own research on all 3 categories that I mentioned and all the 6 ETFs that I'm going to call out next, so that you know what you're getting into and you are thorough with that, why these are recommended and why these are so well performing. And once you are done with your research and you get on to investing, I'll recommend that you pick one ETF from each of these categories and then get started. There is no point picking 2 or 3 different ETFs which are from the same category, because you will end up with a lot of overlapping stocks and that defeats the whole purpose. The ETFs from the first category that I'm going to recommend, the category name is Total Stock Market ETFs, which is a very solid foundational category. And the 2 strong ETFs in this category coming from Vanguard are ticker symbols VTI and VOO. So VTI stands for Vanguard Total Stock Market ETF. So a couple of things that we look at while selecting an ETF is the risk reward scale. As you see on a scale of 5, that ranks 4, which is extremely good. Now, the other thing we need to look out for is the expense ratio. So in this case, the expense ratio for VTI is 0.03%, which is extremely good. You want to go after the ETFs which have very, very low expense ratios. Then the other thing I look for is the past performance. Even though the past performance is not a guarantee for future performance, but still that's something to, that's something that gives you an estimate how the estimated future performance would look like. So in case of VTI, the 5-year return is slightly close to 15%. It is 14.90, very close to 15%, and the 10-year is slightly above 12%, which on a longer window is extremely good. Now, the other thing that you want to understand is what are the holdings for VTI. So VTI, as I told you, that it's a total market index fund, total market ETF, which means that it contains all 3,700 companies that are listed on stock market, and it's a combination of all these sectors. Just that the main sectors, you have all these Microsoft, you have Apple, Nvidia, Amazon, Google. One thing to note here is that the weight of stocks is not same for all the companies. So if you see Microsoft represent 5.92% in VTI, and then Apple represent 5.11. So all these heavy technology companies are on the higher side on the VTI, and this is what tells you what is the weight of these individual stocks. So these are the things that you need to take a note while you're investing in any ETF. Now, the next ETF I want to share in this category is Vanguard S&P 500 ETF, the ticker symbol VOO. Again, if you'll see in the risk reward rating, this also ranks 4. On the expense ratio, VOO has a very low expense ratio, just like VTI, of 0.03%. Now, it tells you that how low cost is this fund to maintain in the long run. Looking at performance, 5 years and 10 years, we see 5 years performance is close to 16%. It is 15.7876. 10 year is over 12%, which again is excellent performance given a long year track record. In terms of holdings, if we talk about, so you will find that Vanguard SPF 500 ETF. It tracks the top 500 companies on the stock market. So in terms of the companies, if you see Microsoft, Apple, Nvidia, Amazon, you see more or less it is the same companies, because whereas VTI is looking at 3700, VOO is looking at 500 companies only, 500 top companies in S&P 500 index. So basically all VOO is included in VTI. So there is no reason for you to own both of them. So that's the reason why when I say that in each category, you just need to pick up one of these ETFs. So guys, the next category ETFs that we're going to talk about is the growth ETFs. So what are growth ETFs? These ETFs represent the companies which are showing higher growth than the average growth of the companies across the stock market. So in this category, the two ETFs that I would recommend is VGT and VUG. So VGT is Vanguard Information Technology ETF. As you can see on the risk reward scale, it is rated high in risk, and then the expense ratio relatively higher than VTI and VOO. It stands at 0.10%, because technology in general is higher returns, but it's on the higher risk side as well. We look at the last 5-10 year returns, so you can clearly see that the 5-year returns are over 23% and the 10-year returns are over 20%, which is extremely good. But need to understand that this is highly inclined towards the technology sector, right? So if you see at the holdings, then you have pretty much Microsoft, Apple, Nvidia. The next ETF that we're going to discuss in this category is Vanguard Growth ETF. As you see, the risk rating is 4, which is better than the VGT, and the expense ratio is also lower, which makes it a great fund. Now let's look at the performance. 5-year and 10-year performance are slightly lower than VGT, but still they stand very strong, 18.85 and 14.89. So 5-year closer to 19%, 10-year closer to 15% makes it an amazing ETF. Now, as I said, this is a growth ETF, so you would see that mainly it comprises of the stocks that are in the growth category. The next category of ETFs we are going to discuss today are high yield dividend ETFs. Now, high dividend yield ETFs are designed to focus their holdings in the stocks that provide high dividend to their shareholders. Guys, these companies provide regular payouts to their shareholders. Anything which is above 6 to 7% is considered to be very good. Dividend is basically a profit sharing that the companies does with their shareholders. So guys, think about it. When a company is sharing 6 to 7% of their profits with the shareholders, it sounds good at that time, but it is not good for the company's bottom line. Anything above 6 to 7% is not good at all, and plus it is not sustainable. A company that promises more than 6 to 7% of dividend to their shareholders probably is using that as a strategy to rope in the shareholders, but in the long run it is not sustainable. The first ETF that we'll discuss in this category is VYM, Vanguard High Dividend Yield ETF. So as you see that the risk reward rating on this is 4. The expense ratio is very low again at 0.06%. And then if we talk about the other things on this, let's look at the performance. The 5-year performance is very strong at 11.23 and 10-year at 9.62. Understand guys, these are high yield dividend ETFs, which means that these are made out of companies that provide good dividend yield to their shareholders. So given that you are getting a dividend yield, of course there'll be some compromise on the growth factor, which is why these numbers are much smaller when compared to the growth ETFs, but that's the purpose of the dividend yield ETFs, that they provide high dividend. Now, if you talk about the companies that are there in this YVM consists of total 557 stocks, as we can see here, and then these are value stocks. If you see, right, these stocks are different stocks than what we had seen in the growth fund. Here you see companies like JP Morgan Chase, ExxonMobil, Procter Gamble, all these companies that pay dividend to their customers. Johnson & Johnson, considered to be very value companies. And what do we mean by value companies? Value means that there is less volatility. When the market fluctuates, there is less volatility when it comes to dividend yield ETFs. Now, another thing that I wanted to share here is that if you look at the dividend growth here, or the dividend yield stands at 2.87%, which means that VYM has a dividend yield of 2.87% and paid a $3.42 per share in the past year, which is considered to be a very, very good, and the payout frequency is quarterly. So if you're thinking of investing in a high yield dividend ETF, then this is the one that you must definitely consider. So guys, the next ETF that we're going to talk about in dividend yield category is VIG, which stands for Vanguard Dividend Appreciation ETF. So as you guys can see, the risk reward rating is 4, which is good. Expense ratio is extremely low, which is how it is supposed to be. And now looking at the 5 and 10 year returns, 5 years stand at close to 13%, which is extremely good for a dividend yield ETF, and 10 years standing slightly above 11%, which again is extremely good. Now looking at the companies that are part of this ETF, we have about total 340 companies, so 340 individual stocks which come together to make this ETF. And as we said that because we're talking about the dividend ETFs, then the companies considered here are very stable, very high performing, and I'll say that very value companies which are showing dividend payouts on a very regular and consistent basis. So you can see it for yourself: Microsoft, Apple, JP Morgan Chase, ExxonMobil, the usual good dividend payout paying companies. So again, if you're considering a dividend appreciation ETF, this is one of the excellent ones. Now let's look at some of the performance here. VIG has a dividend yield of 1.77% and has paid $3.23 per share in the past year, which is extremely good. So looking at the dividend yield here, the annual dividend that they are paid, and payout frequency is quarterly. So again, one of the very good ETFs when you are considering a dividend ETF. So guys, these were the main ETF categories and the ETF funds that you can choose from, one from each category, and you are set. Now again, if you do not have your brokerage account with Vanguard and you do have with Fidelity or any other brokerage firm, just do a little research and find out what is the equivalent for those ETFs in those brokerage houses, and you will find an equivalent. Just get started. So guys, once again, the main difference between the ETF and index fund is that ETFs, both of them are bucket of stocks, but ETFs can be traded multiple times during the day. The price keeps changing, whereas the index fund, the price gets adjusted by the end of the day. So guys, I'm a huge fan of ETFs and index funds for the main reason of diversification. So if you still want to understand why am I a big fan of ETFs and index funds and why not individual stocks, then you need to watch out this video of mine to get more clarity. Thanks for watching, and please subscribe if not done. Thank you very much.